Time now for our Muni Moment, a look at state and local governments. State and local governments expected to issue more than $12 billion in debt this week alone. A big test in demand for Muni bonds amid frothy valuations. Joining us as part of our Muni Moment is Eric Kim. He's the Senior Director and Head of State Government Ratings over at Fitch Ratings. Eric, let's start off with the appetite for this type of debt. Appetite that was pretty strong heading into this year.
Right. No, I think it's going to be interesting to see what the reception is for issuers that are coming to market right now. Illinois is obviously a big name that's out there. Their governor was just here in New York doing some investor meetings and a presentation to drum up some interest in the state. So it'll be interesting to see how things are received as all those different issuers come to market right now.
Absolutely. And there's a lot to question here, especially as investors prepare and brace themselves for the possibility of a recession. When you look across the states, the nation, what does credit quality look like? Are there certain themes that you can extract?
Yeah, absolutely. I think generally states, in our view, are pretty well positioned for a downturn. And we do think one is coming. We expect a recession to hit sometime in the second half of this year. Pretty mild one for 2023. But we do expect that to happen. And we think states have really done a pretty good job coming out of the pandemic. There was such tremendous economic growth, and that means tax revenue growth for states for the past few years. And for the most part, they've been pretty prudent about how to use that money, building up reserves, paying down liabilities. Even some of our lowest rated states, Illinois and New Jersey, have come a long way in terms of building up reserves to historical highs and paying off billions of debt and other outstanding liabilities. So generally, states are in a solid position to deal with the downturn that we expect to come.
Which states are most at risk, though?
Well, I think the thing that we're watching is state tax policy action. So last year we had about 30 states, or a little more than 30 states, actually implement different kinds of tax cuts or rebates or gas tax holidays, things like that. And we're actually seeing states do that again this year. And even as the economic outlook is starting to darken a bit. So we think that implementing big tax policy changes right now, as the recession looks like it's coming, can be a little bit risky and can put a little bit more pressure on states. So that's something we're watching for sure.
Right, absolutely. A little short-sighted, perhaps. And of course, we just had the tax deadline pass us by. It was yesterday. So at some point, we're going to start getting the numbers in terms of how much revenue the states are collecting, the federal government's collecting. April is clearly a bellwether month. What are you expecting to find out?
Well, we think this April is going to be a lot worse than last year. Last year, April revenues were tremendous for state governments and was a big reason that tax revenues ended the year so much better than they had anticipated. This year is going to be different. Capital markets were much weaker, obviously, in 2022. That means that capital gains related taxes are going to be weaker. So that's going to be a big driver. Yeah. And what happens in this month in the collections here is going to be really important for states in terms of their budget process, right? They're doing those budgets right now for the fiscal year that starts July 1 in most places. So the results we get over the next few weeks are going to be an important driver there.
Right. It'll determine a lot of how they move forward. I wonder, how much does the state, do states' credit quality correlate with what housing looks like in that particular state? In particular, how much housing prices have risen or perhaps in certain cases corrected as well?
Right. So housing prices in and of themselves aren't a huge credit factor for states. What they speak to, though, is sort of general economic conditions, and that is for state credit quality. Local governments, it's more important when it comes to housing because local governments are much more reliant on property taxes. But even there, it takes several years for changes in housing prices to really filter through to local tax revenues.
Gotcha. From where you sit, and I know we started off with, getting a sense of the appetite for munis at the moment, but from where you sit, what level of interest is there in adding munis as an asset class to your portfolio after the run that they've had since the start of the year?
Well, it's been interesting to watch the trends in issuance for municipal bonds. There was definitely, last year was definitely a low point. This year has started off on the lower end as well. But there's definitely still a market for this. I mean, and state and local governments have to be out there. There are capital needs that need to be met. Those are not going away. There's a huge infrastructure deficit generally. And there's been a lot of federal money put into that, but states and local governments still need to meet those demands. So there's still going to be issuance, and it'll be interesting to see what the market reception is to that over the next few months.